That enormous deal that was announced on Friday, in which Warner Brothers agreed to sell itself to Netflix. Obviously, a lot of reporting throughout from me on Paramount and their frustration with, in fact, the process itself. And we can now, according to the wires and a press release, tell you that Paramount is now launching a tender offer to acquire Warner Brothers Discovery, $30 a share, all cash. Now, what this will have the effect of doing, essentially, is making the shareholder vote on the Netflix transaction the key, where shareholders will be making their voices heard, conceivably. We don't even have a date for that shareholder vote. Typically, it can be 3 to 4 months after the announcement. Obviously, we've got to wait for the merger proxy and get the background, at least the background according to Warner Brothers. But what we do have now is the background, essentially, according to Paramount. And the fact that throughout, in this press release, they feel as though they were not given the attention they deserved and were not treated on equal footing to Netflix. And hence, in bringing a tender offer of this type to shareholders, they are going to share everything with those shareholders of Warner Brothers in the hopes, of course, that they will put pressure on the company in some way, and or at least indicate that they're unwilling to vote in favor of the current transaction with Netflix. I should point out as well that as these things go, when you file a tender offer, you are then put the company you filed against in the position of having to file a D9, just looking for some of my notes here, which requires them to come out with all the reasons why they decided what they did. And so we're going to get a lot more explication, let's say, around the process itself and see whether, in fact, it's supportive when Warner Brothers responds as well of the idea that they were disadvantaged, Sarah. I want to also say that David Ellison, the CEO of Paramount, who obviously has spearheaded this deal, will be joining me for an interview momentarily, right here from the New York Stock Exchange.
Well, that'll be good to hear from him.
It certainly will. So we're going to be speaking with him in a few minutes to obviously get a lot more from their side of the story. But, I mean, stepping back, we're talking about an almost $100 billion fight now over this company, being that the Paramount bid, remember, and I've made this distinction all along, but it's worth doing over and over again, is for the entire company. And so is worth some $96 billion, $41 billion backed by Larry Ellison, the remaining $54 billion or so from B of A, Citi, and as well Apollo playing a lesser role in terms of the dollar amount. So they say their financing, Sarah, is completely and totally secure. And again, they feel as though they've been completely disadvantaged in this process, perhaps not getting enough attention from the board that they felt that, or at least the board being fully informed in a way to make a decision. Because so much of this comes back to the antitrust that we've talked about, and the fact that conceivably Netflix is going to face a very significant battle on its hands that could stretch out over a long period of time to get this approved, if they are able to, from the DOJ, versus what Paramount says is a much simpler regulatory process for it, in which it believes it can get a deal done in as little as 10 months. And so they've been arguing $30 of cash for the entire company versus the $27.75, 85% of which is cash, the remainder in Netflix stock, and then this stub, as we call it, of Global Networks, does not equal, given, of course, as well, the uncertainty introduced by the antitrust review, $30
Yeah, I mean, they're not going down quietly. They think that they have a better bid and they have a better chance of it happening. Last night, President Trump commented on this at the Kennedy Center, where he said, there's no question about it, this could be a problem because of the size of the combined market share. So we kind of knew that Trump might be skeptical of this deal, and we had some indications and some reports that the administration would look at it with a lot of scrutiny. But I don't know, from an antitrust perspective, I haven't heard anybody come out in favor of this deal or argue on the merits of this deal.
No, not to mention what has been sort of, I think, the growing concern in Hollywood itself for the deal, whether it be some of the bigger names along the likes of Spielberg and so many others.
The movie theaters
are very much concerned about really what this would mean for the industry itself.
I don't think they'd be overjoyed about Paramount and Warner either if they're in the industry.
All
you're
roads lead
reducing the number.
All roads lead to a consolidation, and obviously one of the key reasons that Paramount is pursuing this is the $6 billion in cost synergies that they believe that they can wring out of a combination with Warner Brothers. So you're right, Mike. Either road is not necessarily a positive, but there does seem to be a belief that perhaps what it would mean in terms of the structure of the industry overall, and just how many movies would Netflix really fully introduce at the box office for the typical period of time that movies run, I think are some of the questions that we'll be able to entertain with Mr. Ellison.
I mean, interesting to see the stock reaction. So not surprising to see Warner Brothers higher again. Right? It just keeps going up as the bidding war heats up here. Paramount higher. So maybe the market thinks there's a chance here that they, can pull this off, right? Because we saw that Paramount was lower when Netflix won the deal on this concern that they don't have the scale. And then Netflix getting downgraded over the weekend. Rosenblatt Securities was one. I think others have looked skeptically on just what it appears to be a prolonged period of uncertainty and pressure on the multiple.
Without a doubt. And that was one of the key things we discussed it, Mike, on Friday as well. What would happen to Netflix's multiple over time? What does this signal about their view of their business longer term? Not to mention, where does this put them? Now, that said, if it's a 2-year process and they still don't succeed, have they in some way frustrated a competitor in a successful way for them? Despite what it might be costing them $5.8 billion, that's a reverse termination fee that Netflix is obligated to pay should this not receive antitrust approval. By the way, Paramount, in its deal, has offered a $5 billion reverse termination fee as well. And there's a couple of other key things as well in terms of what Netflix did or didn't do when it comes to antitrust that we can get to.